Welcome back to 7-Minute Options. Friday, November 5th. Peloton continuing to melt down. I thought yesterday it being around 60 bucks in after hours trading was bad enough. Today it went down another $5. So there it is, $30 move from where it closed yesterday, from 85 to 55. Crazy, downright crazy. No need to dwell on that anymore. It really was an outlier. So it was like a 4 delta move or something last night. If somebody would have said 24 hours after earnings, you'd be looking at 55 bucks, I would say, my goodness, that was like a 1 delta move. I mean, that really is an outlier. And it's been that kind of earnings. This is the third one I'm coming across over the last 3 weeks. Pinterest, now Zillow, now Peloton. And so now, my P&L year to date is still green, but just barely. So basically what I did today with Peloton is I rolled it down to the 65 straddle and kicked it out to December. Looking at the order chains here. So basically I opened up the 7110 strangle for $2.19. And today I picked up another $1.23. And why the 65? Well, first of all, it's closer to where the money is now. So I need, less of a capital requirement or buying power to hold it. So right now, this 65 is it's about 10 points, about $1,000 in the money. Whereas if I would have kept the 70 put, it would have been a lot more in the money. Also, the 110 call here has no more extrinsic value. So there's really no value in holding it. Just to take a quick look at that one, if I was still holding the November 19th 110 call, that is trading for $5. So if I hold it from now until November 19th, I only collect $5. So it's kind of pointless. But yeah, that's why I rolled the call down to the 65 is there's more value in it. So by rolling it out to December 17th 65 call there's just a lot more time premium in there. December 17th 65 call right now is trading for 234, 244. So right around $238, right? And that's just a lot more extrinsic value that's going to come out. So the theta on this right now is 5.3 up 0.5. So the two positions together is about 10 theta. Or actually more 10.7, almost 11 theta. And so what I'm expecting is as Peloton will bounce slightly from this low. I really do think it bottomed out today, a lot of panic, blah, blah, blah. But eventually it'll slowly revert to the mean or climb out of it. And then as it starts getting back to it'd be nice if it got back to around 60 over the next week or two. And then I would love to be able to hold this position for the next 20 days. And then when we are at around 20 days to expiration here, then when I roll it out to January, I can take the 65 put, roll it maybe down to 62 or 63, pick up another credit, take the 65 call, roll it out to 67 or 68, pick up a credit, and then slowly reestablish a strangle because I don't expect another huge move. I mean, this massive move in Peloton, this is like a once a year type move. This is bigger than any move in the last 12 months. It's just, it's crazy. But yeah, and of course, IV spiked prior to earnings, and of course people got pretty crazy with this big drop, but of course this volatility is going to come out of it now. And what I'm hoping for is that it just starts puttering sideways, hopefully trend up a little bit back toward the $60 range, and then I'll be just rolling this out for a few months, trying to really establish a strangle, and then eventually probably roll this out to January, February, maybe even March, but eventually that will come back. So right now I've collected $342 already in premium, and if I were to close this out today, it would cost me $1,400. So 1,405 minus the 342 is like $1,063. So $1,063 is what I would lose by closing this position out today. Whereas it's like, I got the position, I might as well keep rolling it, and hopefully my goal is to scratch. So at some point, as this starts moving up, or basically I keep rolling out and keep being somewhat relatively close to the at the money strikes, eventually it'll be a scratch. I guess the question was, why not go all the way down in a 60 straddle? And I don't think I could have picked up a credit. I think if I tried to roll it out to the 60 straddle, it would have been too much of a move, and I would not have gotten a credit. So I'm gonna try to pick up a credit every time I roll. Once in a while you can't pick up a credit, and you have to kind of reestablish your position. And so you might have to pay a little bit of a debit to reestablish like a good strangle or straddle. But in this case, I got lucky. I picked up a credit as I rolled it out. So same story with Zillow. Right now, how much did I pick up on Zillow so far? 117 plus 85. So I picked up 202. And right now, if I were to close this out today, maybe 1255. So like I'm right around $1,000 for Zillow as well. So waiting for Zillow to move back up. Zillow bounced a little bit yesterday. So the lowest it was on the just after earnings was 65.24. Now it's at 65.90, just around. Yeah, actually it's at 66 now. Bounced a little bit yesterday, pulled back a bit today, but hopefully it'll start bouncing. I'm going to have some green days there as it slowly starts moving back toward my straddle. This blue line is my straddle, which is now at 75. So same idea here as Zillow. Temporarily rolled it into a straddle with the expectation I'm going to keep rolling it out for a few more months until the until we get some we'll be able to scratch. Now the Goldilocks situation is if this thing starts moving up and magically I don't roll it and magically this thing ends up right around 65 in December 17th, and I'm like, oh my goodness. And then all of a sudden, I don't owe anybody any money. Like, I'm not out of the money, more or less. So that's kind of like a Goldilocks situation. If this thing really does end at 65 on December 17th and I don't roll it out with 20 days to go, highly unlikely. I think I will be rolling this out 20 days to go, maybe 10 days to go. If we're very close to 65, maybe I'll let it run down to 10 days to expiration or something, squeeze a little bit more out of it, but we'll see. Unlikely, but I'm perfectly okay with rolling these out for the next 3, 4, 5 months. My buying power is okay if it's at 1,400. My P&L year to date is down to 200. Still green, but nowhere near the 3,000 or almost 4,000 that it was just a month ago. Damn it. Well, that's what I get for playing undefined risk moves through earnings. All 3 losses this year came from that. Okay. That's pretty much it. Oh, IWM, I was able to roll down. Oh, there we go. Should be filled. There we go. IWM, I was able to roll it down. Only picked up 32 cents in credit. I was hoping to pick up around 40, 45 is where I put the GTC yesterday. I had to roll it down a few times today because IWM opened higher. And so I still picked up 30. And so now I'm a lot closer. So I got the 220. Oh, sorry. Let's go to the position here. I got the 233 short call, 230 short put. So very narrow iron condor, but I picked up 30 more bucks. And again, I've blown past 238 now significantly. But still 24 days to go. So hopefully at some point there's going to be a bit of a pullback. If I look at IWM, that's where it was the whole year. It's kept bouncing off the 233 line, and now it's just blown past it. So maybe there's going to be a bit of a reversal, a bit of a pullback. So we'll see what we can do there. And then same story with SPY. SPY is now a butterfly, and it's well past 461, which is my long call. So at this point, I don't know what else I can do. I can't really roll it out for a credit anymore, so I might just let this expire and see where we land. So I'll be keeping an eye on it. If it pulls back, maybe I can roll it, maybe I can't. If not, I'm probably going to be holding this till expiration, or maybe with a few days, 5-10 days left to expiration. If I really have no expectation that SPY is going to pull back and it pulls away from me to like the 475, 480, maybe I'll just close it early and save myself a few bucks. So right now the max loss here is $400, but if I were to close this today, instead of that $400 loss, I close it for $382 and save $18. So it's like, do I want to save 18 bucks, or do I want to wait? Do I want to wait the next 24 more days and wait for a bit of a pullback, right? Because even if it pulls back to 460 or 458, I can close it for lower than the 382, so I can save more than 18 bucks. So that's that. Not really keeping an eye on anything else. Want my buying power to go back a little bit higher, and then I'll take it easy on these stupid strangles to earnings. Pain in the butt. Oh, EWZ though is looking good. So we rolled this a few times. We got a pretty narrow strangle here, 30 put, 31 call, and it's right around 30. It's right around the short put, which is fantastic. So right now, if this kind of puts around the same place, maybe it moves up to 30 or 31 over the next couple of weeks, then with 20 days to go, we'll be able to roll it. I could roll this. This is already in December, but I mean, even just where it is now, because it's close to my strikes, I could roll this and get 64 bucks. I might be able to even close it for a scratch. So if I close this position today, it would cost me 340 bucks to close it. Whereas on this position, after three rolls, I have picked up 303 so far. So 303 versus 340. I'm close to being able to close this for a scratch. So by the time, I think if I hold this for another week or two, I'll be in a position to close it out for a scratch, maybe even a small gain. We'll see. Anyway, yeah, I'll spend most of my weekend thinking about these stupid earnings trades, or rather not thinking about them all that much. Live and learn. Not much else to say. Hope for the best, hope for a rebound. That's it. Have a good weekend.